welcome. I'm Kritika Saxena. With me is Mugdha Warrior, and we're here at the NASSCOM Technology Leadership Forum. NASSCOM, that is the industry body that represents IT and all IT-related sectors across the board, conducts a 3-day annual conference. This is the 27th edition, and this time around it's been a mix and match from the Indian IT services industry to global players to even CIOs to even startups and e-commerce players. Several players talking about the road forward and what lies ahead. But Mugdha, the 3-day event started on a very interesting note with NASSCOM completely doing away with the guidance altogether.
Absolutely, Kritika. NASSCOM believes that the lenses of Indian IT have changed to incorporate startups, e-commerce players and several other enterprises. And so guidance just for the IT services sector doesn't make sense anymore. And moreover, the macroeconomic headwinds, which are plenty, make it difficult for the Indian IT sector to predict what lies ahead.
So, and as a result of that, NASSCOM is cautiously optimistic. Listening to the NASSCOM team giving their rationale.
First of all, I want to clarify that this has been a phenomenal year for the industry. We've seen significant growth, so we're on a real high, right? This is also a good time to acknowledge the transformation the industry is going through, right? It's going through significant transformation where the focus is moving from cost to innovation, to becoming partners in the whole digital-first journey of global companies, right? Now, as they go through this transformation, the way we've measured success is totally changing. So in the past, we have used a certain way to look at what success is and therefore make the projections in terms of guidance. And I just feel that that is not apt anymore. That is not right anymore. So that's the reason we are not doing what we did in the past. What we are now looking at is trying to understand the right way to predict the future. And the best way to predict the future is to talk to the people who are in the front line of the business, who are the CEOs and who are actually out there. So starting this year, NASSCOM has come out with a CEO survey, which we've shared with you, which looks at a complete vast range of topics for the CEOs to talk about, and that gives you a fair understanding of what the CEO sentiment is. So if you look at the survey, I think CEOs are optimistic about 2019, but at the same time there's a lot of cautiousness because of the uncertainties that are involved.
Okay, before we talk about the year gone by, Rishad, what to your mind are the key uncertainties that you need to be prepared for, and what are CEOs doing? You've spoken to CEOs as well. 51% believe that it's either going to be same as last year or marginally lesser. So what are companies doing at this point in time to prepare for Brexit, the protectionist measures, and even the scarcity of talent available in the market right now?
No, I think, look, uncertainties happen all the time. I think we're just pointing out that the macroeconomic environment, one doesn't know how it will pan out. The US is going to grow slower this year compared to last year, as we talked about. The uncertainty on Brexit, the uncertainty on the growth of continental Europe, and those are scenarios that companies have to deal with and prepare for. As we talked about earlier as well, one component that is an important component for success, irrespective of what happens with the environment, is talent, and the shortage of talent and the war on talent. And so building talent out is a major focus, I think, for all organizations. And if you talk to at least most technology companies, they're all focused on how do we build out new age skills and have those skills available readily wherever they are available. And our big focus is to ensure that they're available in India.
Yeah. Keshav, you made a very important point on how the reason why the industry has performed well this time is also the fact that some of the protectionist measures that could have happened this year have been pushed. Take us through the key factors that led to the growth in that case, in terms of the deal pipeline, in terms of order book, and purely organically speaking, the fact is that demand still seems to be there. So where is it?
Look, frankly, I think the demand for the industry continues to be very broad-based across all core verticals, all core horizontals, and it is being driven by some of the new age kind of thinking. So while there is uncertainty, as you put it, clearly we feel that for CEOs sitting on the client side to continue to perform and drive PE growth and high profitability, they need to continue to be leveraging the talent from this industry, who is being invested in very strongly from a digital or RPA or any of these other areas. So I actually think that while there is all this bit of uncertainty that is likely to take place, the industry is preparing extremely well in order to make a very compelling value proposition to its clients. And only if decisions cannot be taken will you see a major negative impact? And we'll have to wait to see what's going to happen with Brexit on the 29th, right? This whole year we spoke about it, but it just kept getting postponed. We'll have to wait to see what happens with the trade wars. We'll have to wait to see, what actually happens with that H1B kind of document that's out there. And there are a few more like that which are out there, which is what is causing that uncertainty.
So it is evident that the challenges and the macroeconomic volatility is quite severe. However, Indian IT players say that the demand environment continues to be good and there are opportunities if you have the capabilities to be able to grab them.
So FY20 and FY19 cannot be the same because we believe that India will continue to play an important role in the overall global economy. Number two is that we do believe that US and China will come to some kind of, arrangements or reconciliation between themselves. We do believe that the uncertainty regarding Brexit will come to some level of rest because FY19 literally, if you can see, was an year of uncertainty.
So but that uncertainty is still continuing in terms of macro headwinds. So will client budgets be flat due to that?
I don't think the client budgets will change dramatically, but it is just a mood for what I would say is transformational spending. It depends on how well some of the global indicators perform. But the fact is that there is a demand. The demand is because of all the technological changes that are happening right in front of you. The reality is that AI is now becoming all pervasive. When AI becomes pervasive, you also know while machines become smarter, that means the smarter human beings will create more value. So my belief is that there will be a paradigm shift, and that's why I'm saying that FY20 will be a lot more exciting, and it is only exciting because the technology uptake is improving, and overall the economy, I think that some of the stresses and strains will start easing off.
So I think we are very positive, very bullish about the prospects for this industry.
But deal pipeline, what about that, at Mindtree itself, especially large deals, what's your outlook on that?
I'm very excited. This year has been very high growth for us. If I were to just look at the 9 months ended December, we've grown 19% in this year. Expect to maintain something similar in terms of a growth rate. Pipeline is in a very good shape. Deal win ratios are improving. So very excited about the growth opportunities for our business.
But how are you looking at, the global headwinds, the macro factors in the US and in Europe? How are you looking at that?
Many things in this world are clearly volatile at this moment, and obviously we and our clients are reacting to these as we go along. But all other things being equal, I think there is an enormous amount of growth opportunities, and we are very excited about that.
And NASSCOM has said that digitization and reskilling is the way forward. What is Mindtree doing on these fronts?
Oh, we are very upbeat on our initiatives on skilling our people. If you look at as a lag indicator, the fact that our attrition is much lower than the rest of the industry, amongst other things, is an indication of the fact that our people are seeing that we are investing in them. Many things that we have done that are first in class for our industry on skilling, and continue to do a lot more. But even if you look at an industry level, if you look at the skills initiative that NASSCOM has taken up for our entire industry on some of the newer skills like artificial intelligence, are creating a big impact. Our people are responding to the comments and to the investments that we are making in them at an industry level.
And NASSCOM said that exports, have surpassed the guidance at 9.2%. Could you just tell us a little bit about Mindtree and where does Mindtree fall, especially in this guidance?
At Mindtree level, obviously more than 95% of our revenues is international, about 5-6% of our revenues is domestic there. And like I said, at a company level, for the 9 months ended December, we've grown almost 18 or 19%. So therefore, we are doing extremely well in this very dynamic industry.
And lastly, Mindtree has a really big share of digital revenues, and that, is the way forward for the industry as well, which even NASSCOM has said. What is your take on how the industry is moving towards digital?
We were amongst the earliest to call the trend on digital in our industry. So today it's already become 50% of our revenues, growing 2x of Mindtree. But we think we want to now look at what is beyond digital, make the investments behind that, and grow other aspects of our business as well.
Are you confident you'll be able to cross this or come in the middle of that 7 to 9%?
I think we are going to be well past it. We already talked about it. If you look at the 3-quarter track record, we are in the low to mid double digits.
Yeah.
That's our stated goal, is to grow above market, and I think we will end the year strong.
To speak to clients across the world, there is an initial sense or a fervor or a tremor, so to speak, about the possibility of another economic slowdown around the corner. A couple of investors have spoken about that. Are your clients bracing themselves for that, and are you bracing for that possibility?
I think our job is to do scenario analysis, scenario planning, and then look at plan A, plan B, plan C. So absolutely, to me it looks like the media is wanting a recession. Our clients are not yet there yet, but I think if we settle somewhere between a recession and a Garara year, then we are talking about a slowdown. What that means though is, my view is I don't think the investment in new technology is going away, because that has become an existential issue. It's a boardroom conversation, it's a CEO agenda. What that means is that the pressure on traditional IT will intensify, which means that the pricing pressure, the renewal pressure, the size of the deal, all of the things that we've heard about over the last 2 or 3 years will be as intense as it has been. And what that means is you have to have a really differentiated set of services to be able to sustain that pressure. And that's what we are readying ourselves for.
Fair enough. Digital has been growing for Emphasis. What's the outlook there in terms of order win? How much can you scale this up in FY20?
I think we, at this point, we're tracking at about 15 to 20% higher orders than last year. 80% of our new wins are in next-gen services, which is a great way to actually win business, because you don't play the pricing game, you play the value game. You price to value, not price to headcount. So I think we're very pleased with the way we are executing on our business portfolio. We're also very pleased with the way we are building our service portfolio, whether it's cloud and cognitive. I think some of our acquisitions are in that direction as well. So I think overall we think there is operating leverage, there is growth, there is ability to drive differentiation, and I think there will be some breakaway differentiation and distinction that will start playing out. Every firm will not look and feel like each other, and that's kind of what we are focused on.
As I see, overall the US economy is doing very well. The growth in the economy is sustaining, and as on today there is no sign of a global slowdown that everyone is afraid of, that at some point it will come. But there is no sign that it will happen in next few months. So it would be fair to assume 1 year growth should continue to be good for the industry.
So one last question. Another concern for the industry is the lack of talent, specifically trained talent that can handle the upcoming digital technologies that are there in the market right now. Do you think that somewhere India missed the bus, or if not missed the bus, caught it too late? And how can we bridge this gap that is very evidently there?
See, the entire growth today is coming because of digital technologies. The companies are investing in cloud, in analytics, in AI, robotics, IoT. So basically the whole investment, the traditional applications, the budgets are getting cut, and the new technologies, the investments are significantly higher.
See, these uncertainties by definition create some negative image that, everything is going to go negative. It's not about that. It is about saying that so many changes are happening in terms of technologies, AI, data analytics, IoT, and many other things. The opportunities that are unfolding are many. Okay? And some of them are in distant horizon, some of them could be in far horizon. It is difficult to predict the demand that is likely to be there at this point of time. So it is not as if uncertainty means negative feedback. It could mean hugely positive also. So what is being said here is, it's difficult to take a pulse of exact number, because some of the things are unfolding and these uncertainties may generate its own response. That's the larger view. Uncertainty is not only about saying it is going to be negative ways. It is interpreted probably as tailwinds. But uncertainty means uncertainty.
But how are you looking at the deal pipeline? And at Mastek, there was a little bit of a slowdown in the order book last quarter. How are you and how is the industry looking at the deal pipeline?
I think we are looking deal pipeline very positively. If you look at our 9 monthly results of last 3 quarters versus same period last year, we have grown almost 27-28% in rupee terms, which is much higher than the industry. And that would not happen without a very healthy pipeline as well as healthy orders that we booked in last 9 months. However, having said that, there are always fluctuations quarter by quarter. I would not take that as indicator, because the kind of work that we do in digital era sometimes are large projects. We just miss the deadline of booking it in that quarter. So I would really look at it as 9 monthly order backlog.
Okay.
I would order book, and backlog, of course, that you have. And those things are positive things.
We crossed the guidance on the upper end by a few basis points. We also crossed the guidance as far as the domestic markets are concerned. I think the NASSCOM has said 2 things yesterday in giving the guidance at this point of time. You picked up only one part, that was the headwinds. But what NASSCOM is saying, and what we also believe in industry, there's so much amount of complexities that are there in the industry at this point of time. Giving a guidance is not going to be easy. And as I think NASSCOM has said yesterday, the more you start knowing about it, the more you know, the less you can put it out. Predict. So therefore, I think that's the reason why they're a little hesitant in doing that. But I think what NASSCOM will do in months to come and years to come is build in business models which will have more amount of predictability associated with them, and they'll probably come back. But I think they also shared with the media yesterday also what the CEO survey is showing. CEO survey is certainly showing that we will do better than last year. I can't talk about the specific numbers, and this is not a small database. It was in a large database that they've done. So overall, we continue to feel very upbeat about the industry, continues to grow. There's no denying there's some challenges. The challenges external, challenges internal, and a combination of both of them might still result in good growth for this industry in coming years.
While Indian IT players are bullish on the IT environment, we spoke to several global tech companies to understand what the deal pipeline looked like and what their outlook was on the Indian market. We also caught up with the chief digital evangelist at Salesforce, Vala Afshar, to know his big bets, and we also talked to the former CEO of Unilever, Paul Polman. Take a look.
We are pretty confident about the market. Yes, the market is, I would say, volatile. Instability in Europe. We've seen what was happening in France with the yellow jacket in the last quarter of 2018. What's happening in the UK with the Brexit. The tension between America and China. At the same time, the demand continues to be good around the world. What we do, because we are obviously very careful in looking at what's going on outside, we on the one hand look at the market, look at the competition, what's happening every day, and at the same time we look at the real demand that our people see, the evolution of our pipeline of opportunities. And from that standpoint, 2019 is starting well. We have a good demand. We don't see a change in pattern in the market today.
Will FY20 in that case, Terry, be better than FY19, the financial year 20, versus the financial that's ending in March?
Well, you have seen our guidance for 2019. We expect to continue to grow at a good speed above the market, 5.5% to 8% of growth. We continue to improve our margins. We expect to be close or hit our midterm guidance in terms of profitability. So yes, we continue to stay bullish for 2019 as well.
In the last 1 year, where has India scaled in Microsoft's larger footprint?
India has always been very critical to Microsoft for the last 3 decades, given our investments in India. We've seen a lot come from the country. Initially, of course, it was a lot of the work that happened in the country to really help Microsoft globally in driving it. But over the last few years, it's also been the local engagement that we've had with businesses, with governments, with small consumers and businesses in really helping them go through the path of digital transformation.
The Indian government, of course, has increased or upped the ante as far as privacy is concerned. What is your view with respect to data localization, and where does Microsoft stand? Has this changed the way you view India and the ease of doing business in India?
So you covered a lot of ground in that question. I'll try to work on all of that. Sure. Let me first talk about trust and privacy. Very core to the work that we do. Brad Smith from Microsoft has spoken about it. Just last week he was at the Vatican meeting with the Pope and meeting with the areas where parts of the society which are very critical to think about ethics, thinking about values in this new technology world that we are living in. And it's great to see the partnership from both ends because everybody realizes the importance. So trust and privacy is very critical to Microsoft values. We have been amongst the most ardent supporters and propagators of GDPR in Europe, which I think is fantastic legislation to really take the world forward on data privacy and regulation there. And I think India is learning from that. So all the early draft that I've seen of the work that came through in India on data localization and was very similar to the work that's happened in GDPR. So we are definitely very supportive of that thinking because it creates clarity. It gives a regulatory framework for everybody to think about. And once people are clear, they take the appropriate decisions. So I actually feel this is good progress. It makes it a very clear playing field for everyone to work within the boundaries of the constraints that are set. And as far as the opportunities in India are concerned with this, I think it will only accelerate. India has only really got connected in a big way in the last couple of years in the telecom world, and it's going to show up with that large amount of data flowing through the country. There's lots more opportunity on digital, as we can see today.
I think the power of digital for companies is to leverage data and emerging technologies such as artificial intelligence, such as e-commerce, to better understand their stakeholder needs. And what I mean by stakeholders, their employees, their customers, their partners, and overall community. The more we understand our stakeholders' needs, the more we can invite and co-create value together. That's the power of digital.
But anything here that you saw that excited you? Any tech innovations from India that you're looking out for?
India is on a trajectory to be the second most powerful economy in the world, surpassing the US in the next 10 years. We saw the $1 trillion digital vision report from the minister yesterday. You have 1.2 billion unique digital identities in India. You have over 560 million internet subscribers, 350 million active smartphones, 17 hours a week on social media. So the power of digital, this hyper-connected knowledge-sharing economy that's India, you are poised to be a world leader. And when I meet with customers and trailblazers that are leveraging technologies to not only delight their customers, not only modernize their legacy processes, but to come up and invent new business models, new sources of revenue, new ways to gain market share, India has an incredible opportunity to teach the world how digital transformation can not only help businesses, but help society improve.
We have this opportunity here. Tomorrow we are at the International Advertising Conference in Kochi. We're actually about to visit a school, look at some of the hygiene programs under the Swachh Bharat, which is a tremendous program that needs to be further accelerated. And then obviously the efforts that HUL is involved in with their hand washing campaigns or their nutritional campaigns. I always love to be exposed to that.
I think we're expanding across all of our technology teams in India. And not only that, we are also growing teams in other functions. For example, in data sciences, in production engineering and operations, in product management, user experience and design. So the idea is that we want to build cross-functional teams that can take on end-to-end sort of product ownership and drive thought leadership and innovation from India.
And with that, it's time to wrap up this special show from the NASSCOM Technology and Leadership Forum 2019.
From Mugdha, me and the entire team here at NASSCOM, goodbye and thank you so much for watching this special show.